Okay, so let's now have a look at the role of management, which we've kind of already alluded to. But what we'll do in this section is we'll have a look at how sort of the management roles at a high level really mirror what we would be doing as management accountants. So as far as the sort of high level management roles are concerned, well, one of the key things a lot of managers will have to do in an organization, sort of, right from the very top, almost down to the bottom level managers, if you like, is do some planning. We have to look forward. We have to look forward and anticipate where the business needs to go or what a particular department needs to do. Now, as far as planning is concerned, this can take many sort of different guises, if you like. So this could be, simple budgeting. So maybe it's a case that a manager of a particular department is given their objectives for a particular period and they have to put a budget together, which is their plan of action, which is essentially designed to achieve them objectives. It could be at the very high level. Okay, so it might be senior manager of the business are planning for a massive expansion. Okay, so as far as planning is concerned, loads and loads of different things done as far as planning is concerned. If you're not planning, if you're not looking forward as an organization, if you're standing still, there's a very big danger you will get left behind. Okay, so planning is a big role of management. Now, management then also has to make decisions, okay? So a good example of a decision, let's say within our plan, we have a high level objective to expand our business, if you like, to maybe, bring out a new product line. And so therefore, decision making could be having a look and say, right, well, how are we going to achieve that objective? Okay, maybe we've got a couple of different options. Maybe we can launch product A or product B. We need to decide which of them two product lines is going to give us the best chance of achieving our objective. And so decision making is super important. It could be a very short-term decision. It could be, right, okay, how much material do we buy from our suppliers next week? Or how many hours do we schedule for our labor force? So super important that management, are involved in this decision making process. Management also need to exercise control. Okay, so we need to make sure that the business is on track to achieve its objectives. Okay, super important. Now, control can take many different forms. So control could be something like variance analysis, which we'll talk about a lot within management accounting. So have a look at our costs and revenues and seeing whether or not they were in line with our expectations, if you like, for what we are budgeted for. Control could be like performance evaluation. So maybe we're having a look and we have particular targets in terms of profitability, maybe in terms of liquidity, maybe in terms of customer satisfaction. So we're actually monitoring and reporting on performance against our targets. So maybe we have a target which is to improve our customer satisfaction over the next period. So therefore we have a look and see how we're doing against that particular thing. Now, a nice way we can summarize these key management roles really is they fall under this plan, do, check. Okay, so management looks forward, they make decisions, i.e. they do things to help us achieve our objectives, and then of course they're always checking, they're monitoring business performance to ensure that we're on target to achieve our goals, objectives, and so on. Now, that nicely mirrors, of course, what we do as management accountants, because of course we exist to provide the information for our managers within the business. So the main components of management accounting are, of course, our cost accounting, which is a real bedrock of management accounting, really. If we don't understand our costs, we don't really understand an awful lot to do with the business. Now, management accounting information will often be used for planning. So, big things that management accountants do is they help set budgets, for example, in particular departments. Management accountants will provide information to help control take place. So, variance analysis we've talked about. So, they'll do variance reports for managers to see whether or not we're over or underspending as far as costs are concerned. Are we generating the revenue that we expect? Now, management accountants will definitely help out in decision making. Big example there would be sort of capital investments. So maybe we're going to open a new factory or buy a new production line. And we've got to make sure that actually if we're going to take that decision, is it a financially viable one? And so we might do something like a big investment appraisal calculation and present that information to management. Management accountants will often report on what we call performance evaluation. You could almost consider that with control, really. They're very similar things. But performance evaluation, so basically presenting to management reports, which will say how we're doing against our stated goals and targets, whether they're financial or non-financial in nature. So you can see how, the roles of management and the stuff that management accountants do mirror one another, as you would expect. Now, of course, a big thing that management do, and therefore management accountants support this, is they have to plan. Now, just like we saw really when we're having a look at the different types of information, there are different types of planning that take place within the organisation. So we have our long-term strategic plans. So they're very, very high-level things which the senior management of the business will essentially be judged against. So, a type of strategic planning would be, for example, to maybe look to increase our sales over a long-term period. We're increasing our sales, that hopefully will help us increase our market share, and so on and so forth. If we're doing some tactical planning, it's more the medium-term stuff. And what we often find is, these long-term objectives will cascade down the business. So this example continues. So our long-term plan is to increase our sales by 10% over 5 years. And so therefore, actually, we then say, right, okay, well, our managers in different departments within the business will have a look and they'll create a plan to help us increase our sales. So maybe we break our business down by region. So maybe the Northwest, the Southeast, and so on and so forth. Each of their managers look at their particular departments and they work out, right, how are we going to help contribute towards this overall 10% increase in sales? And then the operational plan will be that real detailed day-to-day thing. We're saying, right, okay, in our particular region, we need to increase our sales by 10%, which will help the overall business increase its sales by 10%. So what we're going to do on a day-to-day basis to help us hit that particular target. Is that going to be maybe increased activity in terms of sales supervisors? Is it maybe going to be increased marketing, and so on and so forth? So the final thing we'll look at in this chapter are limitations. Okay, so management accounting is a bit of an art, not a science. Okay, so the information we provide as management accountants will not always be perfect. Okay, but we need to make sure it's good information so we can think back to our accurate acronym in terms of the qualities of good information. However, the vast majority of organisations, businesses if you like, they exist in pretty volatile environments. So therefore, if we're providing information for planning purposes or decision purposes, whatever it may be, there is always going to be some uncertainty. As management accountants, we don't have crystal balls to know exactly what's going to happen and when it's going to happen. Okay, so there'll always be uncertainty surrounding plans, decisions, and so on and so forth. Now, we've got to make sure that the information we provide in some way recognises, or if you like, incorporates uncertainty into that. So, for example, if we're providing information to help with a long-term investment decision, so we talked about maybe a new factory or a new product line, well, yes, we can do a basic investment appraisal calculation, okay, so that would give us, I suppose, our expectations of the financial outcome of that particular investment. But we can also do things like sensitivity analysis, whereby we have a look at all the different things that could impact the success of an investment and work out, right, how much would these things need to change by before we change our mind on the investment decision. So the things that we can do to incorporate uncertainty into our information, that would provide us a management, which will just make it even more useful. And as it says there, that's going to be super, super important when we work within an organisation where there's a lot of turbulence, there's a lot of change, there's a lot of things that actually are pretty difficult for us to predict. And as we said before, what we do is we go back to that accurate acronym to help us think, right, if we're providing information, what are the characteristics or the qualities that we need to see within that information? Okay, so let's wrap things up then by just having a look at a short form question, if you like, which will help us understand, hopefully, some of the things that we covered within this chapter. And so the question asks us to categorize the following as data or information. Okay, so what we have there is just total labour hours. So maybe somebody said, right, okay, well, the workforce in this particular period has worked, 5,000 hours combined. We've got a labour efficiency ratio. Obviously, efficiency is all to do with speed. Okay, so a labour efficiency ratio, so how efficient has the workforce been? We then got sales change per product in the quarter. So maybe like we've seen in the previous slides, maybe we've got a report which gives us the percentage change in our different product lines. So have we sold more or less of product A, product B, and so on and so forth compared to the previous quarter? And then we've just got a monthly sales total. So it might say for product A, in the last month, we sold 5,000 units. So just to remind ourselves, data is them raw facts and figures which on their own aren't overly useful for planning or decision making purposes, whereas information has been processed into a form which should be useful to help management make their decisions. Okay, so I'll give you a couple of seconds to have a think about that. Okay, well, having a look, let's pick out the bits which would be classed as information. Well, certainly that labour efficiency ratio would be information. Now, to get our labour efficiency ratio, we would need to know, A, our total labour hours, but on its own, total labour hours isn't really that useful. But what we could do is make a comparison between our total labour hours and the expected hours to produce or provide what we did in that particular period. And that would help us work out our labour efficiency ratio, i.e. will we quicker or slower overall as a workforce compared to what we'd expect. Now, of course, that would be information because then we can make decisions to do with the workforce. The other piece of information out of the four there would be C, our sales change per product in the quarter. Now, to calculate that, we'd need D, the monthly sales total, but on its own, the fact we sold 5,000 units of product A, for example, isn't overly useful. But actually, if we know that in the previous quarter, we only sold 4,000 units of product A, we now know if we've gone from 4,000 to 5,000, we've had a 25% increase. And then all of a sudden, that is useful information for the sales manager within the business to then analyze the sales performance. So they will both be examples of information. Say that again, just if you need it. So they will both be examples of information. Okay, great. That brings this chapter to a close.